Strategy is the largest Bitcoin treasury company in the world. Not only that, they have created an orange nuclear reactor to accumulate more Bitcoin for their treasury and their shareholders. They just reported their second quarter results, and in today's episode, I'm going to walk you through it. Thank you guys for joining me once again. As I was telling you in today's episode, I hope I can explain in a more easy to digest way the Q2 earnings report from Strategy, the largest Bitcoin treasury in the world, and how they have accumulated Bitcoin, but how they even plan to accumulate more and reshape financial markets by re-engineering some financial products using AI and using Bitcoin. And let me show you what this is all about. Okay, first of all, this is not financial advice. This is the official presentation that they showed on July 31st. I'm not gonna go through all the slides, only through the ones that I think are worth your attention. First off, these are key highlights that you need to understand. They have accumulated so far 628,791 Bitcoins, which represent 3% of all the Bitcoins that will ever exist. They have attained a market cap of $112 billion, which makes them the 96th largest company in the US. Bottom left is very important. These 4 listed preferred stocks are the ones that are financially engineered to transform the markets: Strife, Strike, Stride, and Stretch. And Stretch has been the largest IPO of 2025, raising $2.5 billion that now they have acquired in Bitcoin. And year to date, they have acquired, or raised rather, $18.3 billion that they have repurposed to accumulate Bitcoin as well. Earnings per share, this is how many dollars every share has accumulated since last quarter. Wall Street was estimating a negative number. That is how clueless Wall Street is, because in Q2, Strategy reported $32.6 per share as earnings per share. Now, more importantly for a Bitcoin treasury company is Bitcoin per share, which you as an investor, if you're investing in a Bitcoin treasury company, in theory, you want to maximize how much more Bitcoin they're acquiring for you. So you can see in this slide, while the target for 2025 was 25% yield, meaning 25% more Bitcoin per share, they have already attained that target, that KPI, and now they have raised that to 30% by end of year. Now, this is an interesting slide because it also shows you how aggressive their Bitcoin accumulation has been. Since Q4 2024, you can see how they have kicked in a more aggressive strategy where they double their Q3 accumulation or holdings, and then ever since they have increased in a very aggressive pace, more Bitcoin. Now you may ask, all this Bitcoin represents some risk, and how are they going to pay for some of these commitments that they have made? So look at this. From a Bitcoin debt coverage, they have 15 times the coverage for basically their debt, and 120 years of dividends that they can give their preferred stocks with their current Bitcoin accumulation. So this is actually sound financial engineering that they have crafted for supporting their financial strategy. Now, another very interesting thing about the report is that they now have shared some formal institutional research analyst predictions for the price of Bitcoin between now and end of year. Now, once again, this is not me, this is not Strategy, these are formal financial analysts giving their end of year prediction. You can see how on the lowest end you have Barclays predicting 116,000. On the lowest end you have 225K or so. So the average price that they're predicting is $168,000 per Bitcoin by end of year. Now, this is where it gets very interesting, because this is where Strategy has an edge over many other treasury companies out there by creating some new set of preferred stocks. These are securities that are targeting different kind of investors. I won't go through all this list. I want you to focus on the bottom 4. This is, this is Strike, Strife, Stride, and Stretch. you can see how each one of them have a different yield. This is a promised dividend basically that every one of these stocks have. And based on their dividend, they have a different risk profile and an expected return. What they're intended to do is to reduce the volatility that otherwise will be from holding Bitcoin itself, and by stripping some of the volatility, be able to give a guaranteed dividend to the shareholders. So in this slide, you can see how there are these 5 different stocks under the strategy ecosystem. The one that I'm highlighting here on the far right side is the common stock strategy. Their ticker is MSTR. This is the one that is accumulating aggressively Bitcoin, and it's a levered Bitcoin exposure. This is where 3% of the Bitcoin is held. Now, the other 4 stocks are have more seniority than MicroStrategy, meaning they get paid first than the common stock, and they are lower volatility, lower risk when it comes down to Bitcoin exposure. And as you can see, Strike has an 8% dividend, Stripe has a 10% dividend, Stride has another 10% dividend, and Stretch is basically a variable dividend, fixed income or fixed price stock. So all of these have different properties as far as volatility, as far as investors that they are carrying for, but all of these have more seniority than the common stock that strategy has. And all of them are over collateralized with Bitcoin to be able to be paid all these dividends that they're promising. Now, here you can see how they are creating a yield curve. They are trying to cater for different investors seeking different duration of their investment term. And based on that, they're given a yield. Now, you can see how there are comparable investment vehicles, and on the bottom side, it's not because of any uptick on the slide, it's because they actually drive a lower yield than these products. So not only are these financial products that are now getting introduced and introduce some novelty because of their Bitcoin strategy, they're products that are giving you a higher yield than traditional counterparties. Okay, for this slide, I will allow Michael Saylor to explain what they have created with these 4 preferred stocks.
We actually created a variable credit spread monthly stock, and we did it with AI. In fact, all 4 of these instruments we did with AI. Right? The real key to the outperformance of them is we use digital intelligence and we built them with digital capital. And we're the first company that was ever able to create a digital security with digital intelligence based on digital capital.
That's very cool, isn't it? Now, I just jumped a bunch of slides that are a little bit more technical. I wanted to show you this one, which is the target that they have for these 4 preferred stocks. You can see how they stand at the top of the pyramid of this capital structure, and they want to make sure that both Strive and Stretch have an investment grade equivalent with basically Bitcoin rating of 10x plus. Then for Strike and Stride to have still a 6x and 3x rating, which will make this a mezzanine equivalent or a high yield equivalent. And then you have as the base layer of this whole capital structure, Bitcoin as the core asset, and then strategy as the equity that is backing all this whole strategy. Now, this is the last slide that I will show you. This is the BTC guidance for 2025. This is basically their prediction. They're saying, okay, to be conservative, even though analysts are predicting 168 average, we're going to base our estimate on $150,000 per Bitcoin. And if that is the case, what they're targeting now is a 30% BTC yield, meaning 5% more BTC per share that they currently have given their shareholders. So this is pretty exciting. I think they have a good chance of attaining this. Now, I hope I haven't bored you with too many slides and concepts. I know that this is a lot to cover. What I want to show you is strategy is not kidding around. They have found a way to raise significant quantities of Bitcoin to use it to back up these new financial products that are becoming very interesting to traditional investors. And if they continue this trend, not only are they going to be a very profitable company, but they are expected to enter the S&P 500 and expected to receive more passive income from pension funds, from traditional funds that are just balancing with the S&P 500. So that's another exciting thing for investors. In any case, once again, this is not financial advice. This is just trying to ease a little bit something that it otherwise will be very complex. To me, this is a very exciting time because I'm finally seeing the intersection of AI and Bitcoin crafting something that is very powerful, that is reshaping some of the classical financial products that we've seen in the markets. And if this keeps getting some momentum, we're up to see some crazy numbers out there. In any case, hope this has been valuable. Please like, share, and subscribe. And until the next one, see ya.